Welcome back. I hope you're having a fantastic day, and I am coming to you live flexing. I'm doing a flex video from my SUV. That's right, my Chevy Suburban. I've been a Suburban man for a number of years. Lots of kids, great vehicle to have to get you around. So anyways, I'm out and about, not in my studio today, taking care of business on the road. So I wanted to bring you a quick update. Watching the markets today, markets opened up down, came back a little bit on hopes for the peace talks, that there would be a resolution or a ceasefire in Ukraine. And I think once the reports came out that the talks were not going well, and that Russia's demands were just too stiff and just non-starters, the markets continued to sell off in the afternoon. And again, you got to watch the momentum into the close. That's really the key. What did the markets do into the close? The interesting thing again today was that Bitcoin was up a little bit. It had dropped a little bit overnight down to that 37.5, 37.8 range, and it pumped up a little bit today, back up into that $38,000, $39,000 range while the markets were down. So that was interesting. And the bulk of the price pump came, if you want to call it a pump, it was a little increase in the price, came when the markets were rebounding a little bit as well earlier in the day on Monday today. But as we got into the afternoon, the price in the markets continued to decline, broke some key technical levels in the S&P, and Bitcoin started to drop again, as well as the crypto altcoin markets did. So right now, again, everybody's watching. Investors are watching the developments in Ukraine, watching for escalation, number one, oil embargoes, number two, and the effects of all of that on the economy, number three, and as well as the CPI print coming out this week, and then some job reports coming out this week, and then the Fed meeting next week, which is going to be key in terms of what they're going to do to fight inflation, because we do have record inflation globally. Inflation's a problem. Obviously, the situation with global conflict is going to escalate that. And then if there is potential for escalation from a global standpoint in the conflict over there, if NATO gets involved, then you will definitely see a March 2020 limit down event. In other words, markets dropping, triggering circuit breakers and dropping to the limits before circuit breakers are tripped and the markets have to take a break. So we saw what happened in March of 2020. So if oil embargo comes out, if oil is banned, and if we ban purchases of Russian oil and we ban imports of Russian oil, and you see escalation or you see escalation into a global conflict where NATO has to get involved, then you will definitely see a limit down situation in markets. You will see a situation similar to what we saw in 2020. Then the real question is going to be, what does the Fed do? How do they respond? And how do they prop markets up this time? Because interest rates are already at zero. They can't lower interest rates. They have to raise interest rates to combat inflation. So they're going to have to prop markets up another way by injecting liquidity at the same time raising rates. It will be interesting to see if they do that, how they respond, what they're going to do. So all we can do is watch the news, because markets are reacting very sensitively to any news on the positive side or on the negative side. And until we get resolution and clear guidance in one direction or the other between the war, Russian embargo on oil, Russian oil embargoes, and guidance from the Fed next week, it's just going to continue to be a ranging market. Lots of pumps, lots of dumps, lots of peaks and valleys in the markets. Very volatile, which can be good if you're trading, and if you're a long-term holder, you just got to ride it out and see what happens and make your decisions as we go along. And kind of keep an eye on the charts and the technicals. Technicals are important. The traditional markets are breaking key technical levels. Oil is going crazy. It'll be interesting to see how high oil can go. Gold is on a run right now. Treasuries are down. So very interesting times in the markets right now in terms of how investors are reacting. A lot of investors trapped in the Russia trade with those markets being closed. So just interesting things going on all around the world in the markets from the standpoint of how they're reacting. So we just have to keep an eye on those things and watch those key technical indicators, as well as the total global macro environment. And when it comes to that, like a lot of people say, they just trade technicals and they just watch the charts. Show me the charts, I'll show you the news. And sure, in general market conditions, that's fine. But when you're in volatile, globally turbulent times, can't get my words out today, turbulent market conditions, global macroeconomic conditions like we're in right now, you got to watch what's going on. You have to watch the news. It's kind of the equivalent of getting into your boat or a ship to go sail at sea. You're going to have charts to navigate, you're going to have GPS to navigate, but if you don't check the weather to see if there are storms out there that you can navigate around, you're going to get sunk. So markets are the same way. You want to watch the news, global macro events, things like that that can potentially change market conditions, so then you can plot your way along with the charts in terms of the price action. Because at the end of the day, what are the charts? The charts are the price action, which represents buyers and sellers, which represents the psychology of the market, key technical levels that are set where algorithms kick in, if this then that, kind of a trade action, and then the retail response to that. And that's where you get your peaks and your valleys, your ups and your downs. That's why prices do not move in a straight line. You have buyers and sellers. What is the fair value of any asset? What somebody's willing to pay at any point in time? Doesn't matter how much supply there is, doesn't matter how limited the supply is. At the end of the day, you have to have a buyer and you have to have a seller to make a market, and price is only worth what somebody's willing to pay for any asset at any point in time. So that's kind of how price discovery works. How much is somebody willing to pay? What is somebody willing to sell for? That's how markets are made. So you got to take a look at global macro environment, because it's very impactful on markets right now, to the upside, to the downside, very sensitive to the news. And then you want to keep an eye on the charts and the technicals to kind of keep an eye on where things are going from a technical level, and where those support and resistance areas are, support buyers, resistance sellers, and what people are willing to pay for that asset at any given time, whether it's a stock, real estate, crypto, Bitcoin, doesn't matter what it is. It's all about demand, supply and demand. Limited supply can affect if there's enough buyers, but at the end of the day, you got to have the buyers to create the demand for a limited supply shock to take place. So these are the things that I'm looking at. Just wanted to share with you my thoughts today from the road. Should be back in the studio tomorrow. We'll take a look at some charts and see how things are going. Until then, I hope you have a fantastic day. I'll see you on the next video.